어, sure.
everybody, and welcome back to Beat the Bell, presented by Kane Capital. It is FOMC Wednesday. I hope that you all are ready to go, ready to trade. We certainly are. It's been a good week up to this point, but we're looking for some volatility as traders, as you guys know. That's what we're searching for. Hopefully we get some today. To talk about today's trading, to talk about the economic calendar, to talk about everything markets, we got an awesome panel starting with Money Mander. Money Mander, good morning.
Good morning. Happy Wednesday. And I think we got the most important meeting today since the last one. So we'll cover that in a second.
There it is. The most important FOMC since the last FOMC. Diamond Trades. Good morning.
Alejandro, what's up? Going to be a massive meeting today. Really excited to dive into it. Let's talk about it.
All right. Ramsay Rippers.
Good morning. Good morning. Let's have a good day today.
All right. Stock Snipa.
Good morning. Massive meeting. Let's make some massive gains.
And Moe Mamba.
Good morning. Bunch of fucking wankers this morning. Every meeting's the most important meeting, man. Fuck Powell. Let's go, man. Let's get it.
All right, we got the whole team this morning, excited, ready to go. We're going to start with Fed forecast, economic calendar. What do we got, fellas?
Yeah, let's go ahead and start with the economic calendar. So before we get FOMC, we have ISM services at 10 o'clock. FOMC, the interest rate decision, will come out at 2 o'clock. Powell will give his press conference at 2:30. Tomorrow, we've still got balance of trade, high impact news, as well as initial jobless claims. And then on Friday, we should get non-farm payrolls. That will be the first jobs data for the month of April. So it'll be exciting to see how the labor market did in the last month. Let's go ahead and move over to the JOLTS report that we got yesterday. So the JOLTS report sent the market lower pretty significantly yesterday morning. If you guys remember, job openings dropped to a new 2-year low, and layoffs were up about 200,000 month over month. So job openings dropped to 9.6 million in March versus 10 million in February. Layoffs were centered around the construction, leisure, hospitality, and healthcare industries. Those were all industries that led job gains in January. So to see that sector that was hot in January pulling back in the month of March shows that the labor market is starting to cool off a little bit. This is one of the first signs the labor market, which has really been surprisingly resilient since the Fed really started this this hiking campaign and started to cool off. Fed Chair Jerome Powell has been really vocal about the number of available jobs relative to individuals looking for work as a potential headwind for slowing wage growth and thus inflation. So I'm sure that the folks over at the Fed are happy to see layoffs rising a bit here and job openings coming down a little bit to more meet that nice supply and demand in the labor market. In recent months, we've had a large oversupply of jobs and not enough people willing to fill them. About 1.7 jobs available for every person looking for work. We will also get some more jobs data, as I talked about on Friday, for the month of April. So keep an eye on that. That's definitely one of the really primary metrics that the Fed has been watching over the past several months in regards to labor market tightness.
Yeah, and one spot that the Fed is definitely not too happy in, the sector that hasn't been so resilient, is the regional banks. So let's cover FRC real quick. If you guys saw over the weekend and on Monday, First Republic there, it's done. It went under. So JP Morgan is going to take over all of their assets. First Republic had nearly 230 billion in assets at the end of last month, making this bigger than the Silicon Valley collapse, and now the third of the fourth largest bank failure in U.S. history over the last 2 months here. So their fate was kind of set. If you looked at the bank, they revealed a loss of $100 billion in deposits after Silicon Valley went under. So a bunch of wealthy clients went and ran and took all of their money out. So of that 230 billion they had in assets last month, 100 billion was taken out, which led to panic among clients. A bank run, the same thing that happened to Signature and Silicon Valley. And they closed the session down 98% over the last 2 weeks. Yesterday, as JP Morgan is going to claim the rest of the remaining assets. And so while Jamie Dimon said the worst part of the crisis is over, other regional banks then yesterday felt massive fallout among fears of systemic risk plaguing deeper than just these handful of banks. So KRE, the regional bank sector ETF, closed down the session 6% yesterday, with 15 other regional banks taking a massive landslide yesterday. So kind of looking under the hood here, The FDIC estimates U.S. banks had $620 billion in unrealized losses on securities at the end of last year. But I just saw a study from NYU and Wharton professors claiming they think it's closer to like 1.7 trillion. So now we're talking big money here throughout the regional banking sector, which holds about 3.1 trillion in commercial mortgages. And 80% of those loans are going to be on regional banks for office buildings that are now vacant and depreciating, raising the chances of defaults on those. So while Jamie Dimon thinks the worst of this is over, what are you looking at, Dimon? I think there definitely is a fear here for the rest of the banks here across the smaller ones.
Yeah, I think if you're Jamie Dimon, it would make sense to say that, after sort of coming to the rescue, saving FRC. I forget what they said they're going to make in profit on just that like transaction alone. It's something ridiculous. I think it's in the billions of dollars of like instant profit. So that'll be interesting. I think it's for me the thing that matters the most in regards to the regional banks is really how it's going to impact, I guess, what the Fed does going forward. Because I mean, the Fed's whole goal really has been to slow down the economy, slow down inflation. And I think, with the regionals under pressure, does that cause enough of a slowdown in lending in and of itself to sort of do their job for them? I think that's going to be really hard to decipher beforehand. And so I think it puts the Fed in a precarious situation where they can make a mistake by, not necessarily seeing that right now and continuing to be aggressive on the rate hike front. When really under the surface, a lot of their work is being done for them. I feel like they won't really know until like a couple of months, and by then it'll be too late. So I think that's really like the biggest risk right now in terms of, the Fed being too aggressive on rates and then having that, come back to bite them later on down the road. So I think in terms of the regionals, that's probably how I'm going to extrapolate out and say, okay, here's what's going on here. Maybe that's going to cause a domino effect down the road.
Yeah, I'm kind of thinking the same thing. I think we definitely get 25 basis points today, and markets are in pretty much agreeal for that. But then should we get this pause at the next meeting, the duration that they hold the pause, I think is fully going to be dependent on how solvent these regional banks can stay. But kind of with the lag in policy there, I think before we start to see inflation at 2%, before we start to see all of that data start to reveal itself, it could be a few months too late where they're going to have to scramble on a pivot and we start to see some real fallout from the rest of these banks.
Precisely. That'll wrap it up for us here at Fed Forecast. We'll pass it back to Alejandro.
Hey, Mander, brother, who told you that you were allowed to now wear a suit?
I know it's a holiday. I got a doctor's appointment I got to run to after this, so we kept it comfy.
All right. Let's dive into the system. We'll take a look at the charts quickly before we the bell. We've got the 30-minute SPX chart, the 1-hour SPX chart. This is, of course, the system. So we got the break below the 50 SMA yesterday. We saw a 50-point move lower in ES futures and SPX right off of the open. It was quite the violent move, but it was bought up, and that is the theme that we have been seeing as of late. So coming into today, despite the fact that we got the sell signal, despite the fact that we broke below the 50 SMA, we're sitting right at the 50 SMA at yesterday's close, but I want to remind everybody that today is FOMC. So for me, the way I trade on the FOMC day, I'm going to look to trade in the first hour, hopefully be in a winner in profit and runners, and then I can ride that into FOMC if I choose. But I won't be doing any trading after the FOMC. I like to let it settle. There's a lot of volatility and unpredictability, lots of false breakdowns, traps, false breakouts. And so I prefer to just sit on the sidelines. But main thing to understand is don't get too excited just because we got a sell signal. Don't get too excited if we get a buy signal today. A lot of times, the day of FOMC, we'll get violent price action, and then the following day we'll get the real move, or nothing really ends up happening, and people form, bull and bear theses, and then it's just everybody gets trapped. So very important to trade the levels on FOMC day. Trade smart, trade light, and manage risk. Remember to always be managing risk first. But if we can climb back above this 50 SMA, I would believe that to be bullish. It would look like a trap below the 50 SMA on this 1-hour chart. So I'll definitely be on the lookout for that today. All right, guys. That's going to do it for the system. I'm going to pass it to Ramsay Rippers for Bet the Bell.
Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right, guys, let's get right into it. Ryan, please pull up the stats for the boys. Monday, slight red day. Very, very, very slight red day. This morning, market is relatively flat, up 0.1%. FOMC at 2. Noah, what do you got? Green or red today?
I'm gonna go green. I think the pullback yesterday set us up for a decent bounce. I'll go green.
Mander.
I'm also going to take green. I think when you get these volatility-inducing events, if the Fed comes out and does 25, does potential for a pause on the table next month, it just leads into a melt higher. So I'm going to take green.
Alejandro, as Mander says it.
I'm going green.
Mo.
I don't think I said that once today. Where did that come from?
Heard it a couple days ago.
Oh, yeah.
I'm gonna go green. No, I'm gonna go red.
Mo going red. Snipe.
I got green.
Okay. Next question. So this was covered a couple of, I believe, last week or maybe the week before. They touched on it, the Fed forecast guys. Apple's freshly launched high yield savings account brought in as much as $990 million, almost $1 billion over its first 4 days, according to a couple of sources familiar with the matter. On launch day alone, their savings account drew nearly 400 million deposits. It's eye-catching because they are offering over a 4% return, likely the main driver of these account openings, that return, plus just how many people have iPhones and are familiar with them. And it's very, very attractive, especially when the average bank is paying less than 0.5%. By the end of launch week, they had roughly 240,000 accounts opened. So what do you guys think? Is this extremely bullish for Apple tapping into a new space, not only being a leader in, mobile devices, laptops, Macs, etc.? How bullish is this? And do you see this being, a future huge revenue driver for Apple Diamond?
I would say bullish. I'm going to say bullish, not particularly because like this particular project has the chance to bring in like a ton of revenue, which I do think it does. But I think it speaks to the broader strength of Apple and just their management team and how they're constantly able to just execute. Like they've had a goal over the last several years to sort of shift away from product focus into more services. And every single time that they roll out a new service, they just execute. They do not stop. And so it's really impressive, honestly, to just see them come up with visions and then continue to execute at an extremely high level. And I think that, when you're investing in companies for the long term, yeah, the ideas are great and the new products and stuff are great, but constantly watching a management team execute gives you confidence in a business. And I think that we've seen Apple do that time and time again. And so I think this is more bullish for me just because of the fact that their team is able to consistently execute on their vision.
Hondo.
Yeah, I mean, it's not gonna surpass like the iPhone sales or the AirPod sales or anything of that sort anytime soon. But I think, I agree with Diamond. I mean, they're just a juggernaut, and it's something that they've added to their business. It's going to make them money, and it's I think it's a good look, and it shows that people trust Apple, which I think is very important. But in general, I think it's certainly positive for them.
Mander.
Yeah, I agree. So we'll see how the tech sales do tomorrow when we get the earnings report and see the revenues. But I think, honestly, I'm bullish on the high yield savings account in particular for the reason Diamond brought up. How much more exposure does Apple have to global customers than JP Morgan, than Goldman Sachs, than really any bank, right? They have billions of users. So I think this is a really great way for them to increase some assets on hand and see what they can do with them.
Snipe.
Yeah, I mean, I have no idea what they plan on doing with that 990 million per se, but it's got to be something big because it's going to cost them 40 million for having it. So yeah, I'm bullish on it.
And Mo.
I guess. I mean, my wife is already in the process of opening a savings account with them on that. Why not, right? Yeah, I'm gonna go bullish on it.
I think really quick too,
Because of the wife.
really quick too, to
Because of
talk
the
about
wife.
the trust thing that whoever hadn't brought that up. It's like the 4% rates have been around like for months, and like it took Apple to open up this savings account for a lot of people to really realize, wait, I can get 4% of my money. Like you can go to a money market fund and do that like for months now. We've had high short-term rates for well over a year, and it took Apple to come out and offer this product for people to be like, oh wait, I can get 4% of my money. So I think that's another thing too, just the fact that people do trust the brand. And it's really interesting how like that sort of was the impetus for a lot of people, like Mo said, now looking into a high yield savings account, even though it's kind of been on the table for quite a while.
Fair. Great points. Let's get into the last question. Ryan, pull up the tweet from Unusual Whales. So Bernie Sanders calls for income over $1 billion to be taxed at 100%, saying that people can make it on $999 million. Longtime wealth advocate Sanders argues that all earnings above $1 billion in the U.S. should be confiscated by the federal government. You guys like this, or do you think it's a little bit of a slippery slope? Mander, what do we got?
No, I think this is ridiculous. I mean, 100% tax on anything removes all incentive. And so when I was looking at this, right, if you're smart enough to make $1 billion in a calendar year, you're clearly not going to show $1 billion to the IRS. But just the concept of, at that point, if you made 990 million, why would you go do a single other thing? Why would you even get out of bed in the morning? Because you're going to get taxed at 100%.
Yeah. Mo.
Yeah, I mean, I'm with Mander on this one. This makes no sense to me at all whatsoever, unless I'm dumb here. This makes no sense to me at all. So, no, I don't. I don't agree with that.
What do you mean, man? It makes tons of
What do you
sense.
mean,
If
what do
you're
I
a
mean?
socialist, commie,
Huh?
it makes tons of sense if you're a commie. Diamond.
I don't my view on all taxes has just been make people pay what they're actually supposed to pay. Like I never understood the point of like raising taxes, because like Mander said, if you're smart enough to make all that money, you're going to find the loopholes, right? Like just close the loopholes instead of raising the taxes. Like if you raise them, people are still not going to pay them. So it's like, it doesn't change anything.
Right.
So yeah.
Hondo and then Snipe.
Yeah, it doesn't really make sense to me. I don't even understand how that could possibly be executed. But that's insane. Also, if you're making $1 billion in a year, that's so much. How many? I mean, what are they going to tax? Like the two people that are doing that? Like that's kind of crazy. Anyways,
Snipe.
I'm not even sure where to start on this one. First off, I think that this is just Bernie putting out dumb shit on the internet to get poor people all fired up, because realistically, there's no chance that will ever happen. If I made $1 billion, I would literally say, like, catch me if you can. You wouldn't be able to touch that. I would be able to put that money in places you'd never even think to look. And honestly, man, like, I think Bernie wants to tax anybody who makes more money than him. And if I'm not mistaken, that's at about $5 million right now. So that's pretty much just the kind of stuff he puts out on the internet. It gets me pretty upset to see. But yeah, man, like, no, 100%, that's insane. That will never actually happen. And I don't know why he's putting that stuff out there on the internet, just to get poor people fired up, because realistically, it's the poor people who don't understand how money works, thinking that someone who makes $1 billion is going to get taxed that hard. Because that's just going to trickle down towards the middle and lower class. And the billionaire is not going to be the one getting fucked. It's going to be the people under him.
Yeah, agreed. I think we're all on the same page. There's better ways to do it. No need to attack the personal employee, the personal worker, whoever the case may be, even the corporation as well. I like the idea of lowering taxes, allowing more capital, more money to expand, boost the economy, boost your business, hire more people, create more jobs. Excuse me. That's going to do it for Bet the Bell. We'll pass it back to Hondo here.
All right, we're going to go to Moe Mamba for Mamba Market analysis.
Go ahead here and share my screen. It's massive, massive. They were just infamous trend line right here. You, I know. These guys are already tagging me with this shit. All right. What's up, guys? Good morning. First, we're going to go over XLE. This was a trade would love to cover and let you guys know about. I mean, if there was, I think this is one of the best setup day trades I've taken. This had about four convictions to it. Monday morning. So Monday morning, we had a nice run up. What made me come to this ticker is I saw a flow on the on the options flow, right? I saw a flow on this sector. So I ended up pulling up this ticker, flipping through a few tickers, but I saw this one coming up into where? Well, one, you guys know I like the gap fill reversal. So we had a gap to fill up to here, which it ended up doing. So that's one, right? So we have gap fill reversal. Next, we have our 9 cross over the 30. If anyone knows, that's the peaky. You have your 9 over your 30. You're coming back into your 30 for a test and rejection, right? Test that 30 and close. So that's 2, right? I ended up triggering it right at the 9 EMA. Sometimes you don't quite come up and fill that gap. And then plus, if you look right here, we ended up having resistance right about there. So I didn't want to miss out on the move just because I'm waiting for a clean gap fill. It doesn't, most of the time it does fill, which it did over here, but there's times where it just comes up into the 9, rejects, and it continues to drop. So we have put flow, we have a peaky, and then we have as well a doji. So we ended up forming a doji where off of gap fill. So we filled the gap, we tested the 30, and then we also dropped and closed below what? The 9 as well. So gives me very high conviction on this trade that's going to go my way. I ended up triggering it right here, right off this candle. Once we touched the 9, grabbed those puts, got our doji, added more conviction, and then ended up dropping, coming down. I was able to take some off on the day and then hold some into tomorrow, position myself really well. And then, I mean, the rest is history. XLE dropped. The crazy thing is I ended up waking up a bit late and coming into the market a bit late. I think maybe like 15 minutes late, 15 minutes into the market, something. I ended up closing out my trade somewhere around here for 64%. I looked back at the cons and unfortunately, I looked back at the cons and I ended up running 250%. So that's a great setup. That's the way, you know, I alerted this trade was based off of this setup. This was a A++ setup. If you're looking for a clean setup, this is it right here, right? Now, two ways. Now, let's see the downside, right? If this did not end up going my way, I took next week's. Why? I allowed myself to keep a stop loss up to 85.60, right? So if this ends up going through. Now, if I took weeklies, I would want a tighter stop loss. What would that be? That would be the gap fill up here, right? Why? Because I'm playing it off the gap fill. That's my first reasoning as to why I am taking this trade is the gap fill, right? So clean trade with a candlestick pattern, gap fill, and then the peaky, and then the put flow, right? So really clean trade. Now let's jump into SPY here. Let's go on the daily. So reason why I said red today. So if you guys tuned in on Monday, I had mentioned, well, let's delete all this crap right here. If you guys remember, I had mentioned on Monday that I wanted a move into this demand zone and supply zone, and then a move back down to where? To 411.75. So I wanted to see something like this come down, and then we drop down to 411.75, and then look for a move back up through this supply zone and hit that gap fill, and then we drop, right? So what ended up happening was we ended up, you know, coming down into that level, fell through, bounced off of what? If you guys still had this level on here, this was a big level, 408.3. That was the level we bounced off of, but we did close below this support. That's the reason why I'm going with the red day. But it's honestly 50-50. There's, you know, we do have some news coming out, FOMC today. So who knows? It's honestly a flip of a coin of where we go from here. But price action is telling me further downside. So I am going to go with what the price action is telling me. So I'm calling red on that. But let's see what FOMC ends up doing. If FOMC ends up bringing us back up, come tomorrow, I'm bullish for further upside. See if we can get back through this supply zone and then come up into this gap fill 422. This is why I have this level up here right there. We have a nice gap fill up here. Looking to have that gap filled either this week. We'll see where FOMC gives us a direction in the market. And I think we'll head that direction the rest of the week. So, and then we have NFP Friday, I believe. So, all right, guys. That'll be it. Thanks, Hondo.
Thanks, Mo. It's going to do it for this morning show, guys. Appreciate everybody who tuned in. If you're watching on the YouTube, do us a huge favor and give us a like and subscribe to the channel. It is FOMC day. Manage risk, trade smart, people. It's going to be a good one. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com to trade with us. Other than that, have a great rest of your day, and we will see you guys on Friday morning at 8:30 a.m. Eastern time. Have a good one.